Have you ever wondered why one of the world's smartest and most stable countries is suddenly buying tons of gold? What does Singapore know about the future that others don't? Today we're diving deep into the real reasons behind Singapore's massive gold strategy in 2025. And trust me, this is not just about money, it's about power, protection, and preparing for something big. Welcome back to the channel. If you love learning how world economies, global moves, and hidden financial strategies shape our everyday lives, then you're in the right place. Before we begin, make sure to like, subscribe, and turn on notifications so you never miss videos that reveal what's really happening behind the headlines. Hedge against global currency uncertainty. In 2025, the global currency landscape is more unpredictable than ever. The US dollar, which has long been the backbone of international trade and reserves, is facing pressure from inflation, rising government debt, and geopolitical rivalries. Many countries are exploring alternatives for stability, and Singapore is no exception. By purchasing gold, Singapore is reducing its dependence on any single currency. Gold is not tied to a government or central bank's policy decisions, making it a truly neutral global asset. For a trade-dependent nation like Singapore, this helps protect the country's financial strength in case of major currency devaluations or international market instability. Strengthening national financial reserves. Gold plays a crucial role in strengthening a country's reserve portfolio. Singapore has one of the world's most respected financial systems, and maintaining strong reserves is key to protecting its economy. In times of crisis, whether monetary, political, or military, countries with strong gold reserves are better able to stabilize their currencies, reassure investors, and protect national wealth. Gold is a physical, globally recognized store of value with no default risk. So when Singapore adds gold to its reserve holdings, it signals long-term financial confidence. This move helps safeguard the Singapore dollar and enhances trust in Singapore's financial management internationally. Preparing for shifts in global economic power. The world is moving toward a more multipolar system where power is shared among multiple regions rather than centered around the US or Europe alone. Countries like China, India, and others are increasing their roles in trade and finance. During such transitions, financial systems can become unstable or unpredictable. In times where global leadership and alliances shift, gold acts as a stabilizer. Singapore, being a small but highly connected nation, understands the importance of preparing early. By increasing gold reserves, Singapore is ensuring it remains resilient no matter how global power shifts. This strategy allows Singapore to stay secure and influential in global finance. Safe haven asset. During global crises, gold has historically been considered a safe haven during times of political conflict, pandemics, recessions, and economic uncertainty. When stock markets crash or currencies fluctuate wildly, gold generally maintains or even increases in value. For Singapore, a nation without natural resources and highly dependent on international trade, having reliable sources of economic protection is crucial. Gold provides this stability. It ensures that even if global markets face shocks, Singapore can defend its currency, support its banks, and maintain confidence in its economy. Buying gold in 2025 reflects strategic preparation against unpredictable future risks, rather than reacting after a crisis has already begun. Singapore's strategic position as a gold storage hub. Singapore is emerging as Asia's premier gold trading and storage center, competing with traditional hubs like London and Switzerland. The country has built world-class vaults and a business-friendly regulatory environment that attracts global gold investors and central banks. By purchasing and storing more gold itself, Singapore increases its credibility and influence in the global bullion market. This strengthens its financial services industry, attracts investment, and boosts economic activity. As more countries shift reserves toward gold, Singapore benefits by positioning itself at the center of this trend. Buying gold is not just financial, it supports Singapore's long-term strategy to become a dominant global precious metals hub. Reducing reliance on the US dollar system. For decades, the US dollar has been the main global reserve currency. However, many countries now see risks in relying too heavily on a single nation's financial system, especially when that system faces inflation, political disputes, or debt challenges. Singapore is diversifying its reserves to reduce exposure to any single economic power. Gold does not depend on the decisions of any government. It is universal and stable. By increasing its gold reserves, Singapore ensures greater independence in international finance. This strengthens Singapore's bargaining power globally, helping it maintain neutrality and sovereign financial control in a world with rising economic tensions. Protection against inflation and cost of living pressures. Inflation is affecting many countries, and although Singapore controls inflation better than most, it still feels external price pressures due to imports. Gold historically rises in value when inflation increases, making it a strong hedge. When central banks print more money or economies face higher consumer prices, the value of currency falls, but gold remains stable. By holding more gold, Singapore preserves national wealth against global inflation forces. This protects the long-term purchasing power of the Singapore dollar and the savings of Singaporeans. It demonstrates the government's focus on safeguarding economic stability and ensuring that living standards remain secure even in inflationary times, supporting long-term economic stability. Singapore prioritizes long-term planning over short-term gains. Gold fits this philosophy perfectly because it retains value over decades. Unlike stocks or bonds, gold does not rely on corporate performance or interest rates. It is a timeless asset. When economic cycles shift or markets fluctuate, gold helps smooth financial stability. Holding gold allows Singapore to weather unexpected global downturns and maintain steady economic development. By investing in gold now, Singapore prepares for future financial changes before they happen. This proactive approach ensures that Singapore's economic system stays strong, reliable, and respected worldwide. It reflects the government's disciplined, forward-thinking financial strategy. Central banks worldwide are increasing gold reserves. Singapore is not alone in boosting its gold reserves. China, India, Turkey, Russia, and many Gulf states are also doing the same. This global shift is partly driven by declining trust in traditional reserve assets and concerns about international trade conflicts. When many central banks increase gold holdings at the same time, gold becomes more valuable and strategically important. Singapore is moving in line with this global trend to avoid being left behind. If Singapore did not increase its gold reserves now, it would risk losing financial advantage compared to other rising economic powers. This is a competitive, strategic defense move, ensuring trust in the Singapore dollar. The strength of a nation's currency depends not only on its economy, but also on the confidence others have in its financial management. By backing the Singapore dollar with strong reserves, including gold, Singapore strengthens trust in its currency. This helps maintain low borrowing costs, strong foreign investment, and a stable business environment. Gold enhances Singapore's credibility because it cannot be printed, devalued, or defaulted on. The more gold Singapore holds, the stronger the foundation supporting the Singapore dollar becomes. This reassures traders, investors, and citizens alike, ensuring Singapore remains one of the world's most stable and respected financial systems.